Hello, I'm going to show you a quick video on a trade today for after hours earnings on LendingClub. So today LendingTree reported well, their guidance was better than expected, and they received a couple upgrades, and the stock was up almost 40%. Now meanwhile, a similar company, LendingClub, fell to as low as down over 5%, just above $13, when they've had a high of 29.29 in the past 52 weeks. So there is potential for some huge gains in LendingClub if they can report well after the bell. So I'm going to look at playing this stock with some options. First of all, you can just go long the stock here. I entered it earlier today when it was at a bit of a better price, but even at this point, if they report well, you could see a very nice gain by tomorrow morning. A great way to play it though with options is to buy an in-the-money call that's out into the future. So I'm looking at something around October. By then, hopefully, LendingClub will have started to improve and the stock price will start to move forward. So something in this 9 to 10 range where you can buy a call for basically only pennies more than the stock price. So you're looking at 14.10 when the stock is trading at about 13.80. So you're only paying about 1.5% more than the market price, and you're only putting down about 1/3 of this value. Also, if you want to add a little bit of protection, you can sell one of these $14 calls for 80 cents, and then you've already made almost $1 profit on your calls as long as the stock trades above $14 by August 21st. So if the stock trades up at all, you've already made a 25% gain, and you still have those calls that are good till October. So LendingClub just reported earnings. They had a slight beat, and the stock is trading up a bit. It's been trading around the 14.50 range, which is plenty for this trade to be profitable, whether you went long the stock, did a vertical call, or did a diagonal call. I chose to do a diagonal call, so I bought the $10 October strike for $3.90. So it only cost me a bit more than the stock price at that time, which was in the $13.60 to $13.70 range. And then I turned around and sold the $14 August strike for 90 cents. So this allowed me to make a profit of $561, or 24% of my investment, as long as the stock trades above $14 by the August expiry. And judging by the results, it looks like it should. However, in case the stock does pull back, my break even is $13.05, so I do have some downside protection, and I haven't put that much into this options trade. The reason I chose a diagonal call is because I can also write further calls for September and October expiry. So I was able to collect about $527 in revenue for this expiry going into earnings, and I won't be able to collect that much for future months, but there will be still some time value in the October and September expiries. So if the stock is trading just a bit above 14 at the August expiry, I could buy back my call for probably lower than this 90 cents and then sell another one for the September expiry to get a little more revenue. So this 24% profit could increase to the 30, maybe even 35% range if the stock continues to trade sideways to slightly up. So that's why I like the diagonal calls, because they provide some revenue And if you go far enough out, you can get several different months where you collect revenue. So I couldn't get this trade out to you before I entered the position because it was just a last minute trade going into earnings. But I hope this sheds some light on the diagonal call and the reasons why it's a good option strategy. Please subscribe to my YouTube channel and share. I'll try to put out further videos as soon as I enter the trade, so you have time to also enter the trade if you'd like before the earnings or whatever catalyst might be. Add me at Daytrade Canada on Twitter and Daytrade Canada on Facebook, and you can also visit the website. Hope you have a great day and good luck trading.